So yes, I think that we can start. So this is going to be an absolutely interesting day. So we'll start by looking at the news in, for example, on investing.com. And as you can, if everybody looked at the economic data that just was released roughly half an hour ago, then the US numbers were absolutely horrible. So we'll have a look at them at the moment, but they will basically dominate the most of the trading day when the US session opens. It's going to be absolutely extremely volatile, mainly due to the fact that it was expected for US numbers to be significantly better than they actually were. And it was also expected that due to the fact that they were going to be better and the economy looked like it was in really good shape and was going to become in really good shape, it was anticipated for the Federal Reserve and the Federal Reserve to start pronouncing rate hikes into the future. And it was also expected for fiscal policy and so on to relax fiscal policy and monetary policy. But considering that the job numbers today were not as good as expected, then you probably will see a continuation of very low interest rates for a long time and probably additional physical extension of fiscal policies. So yes, it will just be more of the same, and therefore you could expect for the market to rally because it will be cheap money available for the coming future, and yes, the trend will just continue increasing. So you can just see here headlines for in investing.com. You can see that there were only 266K non-farm jobs added in April. It was expected for nearly 1 million, so 978K was expected. So if we just look at the economic data that was released, there was good data from Europe, not significant data, but PMI for example, Britain, it's horrible. But we'll go and look at the economic from the United States. So we have non-farm payroll, for example, here. Last time it was 770K. It was expected to rise this time to 978K, and instead we got 266, which is well lower than expected. And of course, the market just completely shot up and to the air. And we saw, for example, the US dollar completely crashing. Major currency pairs like the Great British Pound, US dollar, it rallied. The euro rallied against the US dollar and so on, and we'll have a look at that in a moment. But we also saw yields, for example, they completely crashes down roughly 3% at this current stage. And we can also see that the unemployment numbers actually increased. Last week, 6%, expected 5.8%, and it actually increased the unemployment rate, so up to 6.1%. So the expectations that things were going back to normal and the economy was basically overheating, those expectations are kind of put into the drawer at this point. And you could expect interest rates to be low for a considerably longer time, and therefore a market probably will rally in the next few trading days. So if we look at overall for the commodities market, we can see that most commodities, except for oil and Brent, for example, WTI and Brent are down. Crude oil is kind of down quite a bit, and WTI is down as well. Gold is up 1%. It has broken its trend line and is heading toward 1900 at this current stage. Well, 1850 first and then probably 1900, but it's up considerably. Copper as well due to the shortage of copper. But if you look at, for example, the US yields, it is down 1%. It was actually down more than that when I looked. You can look at the charts for the US chart. We can see that it has bounced a little bit. It went basically past the bottom of the Bollinger Band and then bounced. So yields started to increase. Basically, it was all the way back in September. They started increasing, and the market got fairly fearful around this area here. We can also see the big crash in the market around this area due to the fact that that people were started investing in yields instead of invested in equities. But since then, it has topped around this area of 1782 and has started to decline. So it is getting fairly on the edge of being oversold. So we're at, in the RSI, we're at 39. We are significantly bearish, or momentum is significantly bearish, both in the MACD and also for the stochastic. So there is still a lot of room to the downside. We can look at the Fibonacci retracement as well, and it could actually drop down to 1400 or 1200 before we see a turnaround here. Then we basically will see a turnaround because it will at some point be significantly oversold, and then we'll turn back to the upside. It won't just drop at one point. But of course, the lower this gets, the higher the equity market goes. So yes, that is usually a good thing to look at. So we can also look at the US dollar. It completely crashed all the way down to the very bottom of the Bollinger Band, and now it has recovered a bit, but this will most likely continue. So we did see a massive breakdown for the last give or take a month. Then we rallied for nearly a week, and then we just completely crashed, ran into the middle of the Bollinger Band here, and then just collapsed. We're on the edge of being oversold here at the 38 in the RSI. Stochastic and the MACD are very bearish indeed. So we'll see a lot of choppiness, but overall expectations is that we will just continue going lower. There are a few support lines here. There are 89.7, that is one, and then we have 89.18, which is where we bottom out. This is roughly in the beginning of 2021. So market is going to open in a bit, and we'll go and look at the US or the currency market. We actually have it here. So as you can see, we have here the US dollar and the Great British Pound and the US dollar, and we have this upper trend line here, which we needed to break, and we have actually broken through that. We have pulled back quite substantially. It's not strange, as it went from roughly being up 0.10 to going up to 0.55 and then breaking down again. So it's getting fairly overstretched, but if we have a closing above this line, then we could start seeing this trend changing and going back towards the upside. Don't really see this breaking down now that the US dollar has started to depreciate again. So as long as that is the case, then this will basically continue rallying to the upside. Look at technical indicators, they're all favoring the upside. There's a lot of room to the upside here in the RSI. We're approaching top of the Bollinger Band, so pullbacks should be expected, but a rounding off here is what it seems like is going to happen here and continuing to the upside. Same goes for the US dollar and Japanese yen. It also fell apart. We ran into resistance here at this upper trend line, and it looks like we're heading back towards these previous lows at 107. We could also run into the 100 moving average if this breaks as well. Euro also rallied up towards this upper trend line and then got rejected. It is also fairly likely that we will continue rallying here as the US dollar starts depreciating. Then we'll just have a close above here, and then it will continue to the upside. Then we have the Aussie dollar also reached this important resistance line and got rejected, and it most likely will be very similar to the Great British Pound US dollar and the Euro US dollar. It will, if it managed to close above this line, then it's very likely that will take out 0.8 and 0.9. US dollar, Canadian dollar, this has been significantly oversold for a very long time. We had a massive breakdown yesterday, and therefore we could see this rally to the upside today. So yes, we could see this rally up towards the 20 exponential moving average before continuing and going lower. So at this point, yes, that is about it. And we're supposed to look at we are going to look at the money flow index. I will basically take a new indicator for each session and explain what basically that indicator does and how it technically works as basically a part of a theory and part of a course for every single session. So market doesn't open until give or take 20 minutes, and it's going to be quite a lot of volatility. It's going to be a lot of ups and downs and in the market today. So yes, usually these are the indicators that I use. I use the Bollinger Band, which I've covered I basically covered all of these indicators in the previous sessions. So Bollinger Band, stochastic, the CCI, the RSI, and also the MACD. If you haven't seen them, you can basically see them in our Patreon channel if you have access to tier 3. So we also, or I use also the cloud, the Ichimuchi cloud, which technically use in a different manner. So I don't use all of the indicators and the Ichimuchi cloud. I use for example, the Bollinger Band and also the cloud with the stochastic and RSI and MACD. So too many indicators, it will become fairly difficult to basically trade. It just makes things worse, actually. But we'll have a look at we'll have an S&P 500 here. Yes, there we go. So this is the money flow index, and my idea is to first of all tell the theoretical part of how it basically works, yes, how it technically works in theory and also in practice, and then also look at how accurate it technically is. Does it reflect price action or the things that are happening in this graph? Do we see it also here? Would it basically help us to identify these massive falls in this market and those massive uptrends? And my conclusion playing around with this is yes, it is fairly accurate. So the big difference between the money flow index and, for example, the RSI is RSI only takes into account price action, while the money flow index, it takes into account price action and also volume, and that's a fairly big difference. So the idea here is that it is an oscillator, very similar to the RSI. It has overbought conditions at 80, which is the green line here, and it has oversold conditions in the red line here. So it basically can tell you when things are overbought and when things are oversold, depending on those the green and the red line. Then it also can tell you whether or not we have an uptrend or we have a downtrend. If momentum is to the downside or momentum is to the upside. For example, here momentum is definitely to the downside, and same here is momentum to the upside. So oversold for overbought conditions are right there. Overbought conditions are right there, and the same goes for here. It's overbought conditions as well. Here we have nearly oversold conditions, but we don't have an example of where we have complete oversold. So this is the S&P 500. Usually there are more overbought conditions than there are oversold conditions, but just considering overbought conditions. So for example, we have a breakdown here. This is a fairly significant breakdown. This was basically in 2018, and we can see that we are significantly outside of the we're up at the 92, and 80 is basically the limit. So this was a fairly good prediction that we were basically going to break down. Sorry about that. We were going to break it down over here in 2018. Then we have another one here. So this is saying overbought, but it's basically due to the rally from this bottom. So not really clear there. If we go over here, this is above, and this is just before the major crash. So this is the move right there where we basically start falling. So the major crash starts here. So we are actually down there. So not really accurate. It is close, but not really close. If you started shorting here, then you would, yeah, you'll make a fairly good trade and it will bounce. You will most likely sell or sell your trade down here at the 50 moving average, but most traders, when they see a bounce from here and heading higher from there, they would long gone have been out of this market. So the right trade would have been there, but you can see that there's no real indications here, so not really accurate. So we have another overbought conditions right here, and this one is fairly accurate. So if you looked at this and started selling, then you would have caught this massive move to the downside. I think it dropped roughly 10% to the downside. So a fairly good drop. So yes, it can catch those moves. For example, here it is very accurate. Over here it is very accurate. However, this massive move here, not really. Not if you just based your trade on those overbought conditions and so on, then you probably would not have made it is less than 50, to be very honest. Here, for example, it's way off. If you started selling here when it's actually in a massive uptrend, then yes, it's not really good. So, but it is, of course, a lagging indicator, and it is difficult to get those. But that is it is a good thing. You probably, like all other indicators, you can use it with several. If several indicators show the same thing, then it is probably more accurate. But on its own, not that much when you're considering overbought. So oversold is, for example, here on the edge of an oversold, and it is basically pointing to that. So we did fall significantly further. So we started buying here, and then it fell roughly 18%. So not really. But overall trend, it is fairly accurate when it comes to those things. That is basically saying when we are going to trend significantly to the downside. So I usually take these massive spikes here and can see, okay, this is okay, it's fairly accurate that we are going to see a massive move to the downside. So we have one here as well. This one is very accurate that we have this move to the downside as well, how far we did drop. Then we have, for example, this move. So here as well, also a downtrend. Then we have the move that we are seeing right now, and that is also fairly accurate that we are predicting this move. It is turning around, so it could indicate that this was just a minor drop and now we are going back towards the upside. So then we have also here, this one is less accurate. So there's nothing really happening here, even though we are having a massive drop to the downside. Then we go back in time. We can see that we have a drop here. And here it is not that really accurate that we are going to see this massive drop to the downside. So here it wouldn't be very helpful, but this drop is very, very accurate. So thing that I get out of this is that if it goes significantly outside, for example, here we're all the way up at 92, while the other ones here are barely at 85 and at 81 and so on. The higher it goes, the more accurate it becomes. So it is not often that we see these moves to 90. You can just pull it back here. It's not often that we see these moves up towards 90, but when it gets to those levels, then this indicator looks like a very good a predictor for those drops, because that is basically on the spot for those predictions. But like with most indicators, you don't use just one, you use several. So this could be used together with, for example, the RSI, the stochastic, and the MACD, and probably also the Bollinger Band. And if all of those indicators should show the same overstretched position that this is completely overbought, then it is expected to drop. The same goes from the other way. If it's completely oversold, then it's expected to go the other way around. So that is basically the way this works. It is also used as a trend changer. So the idea is that when it hits the very bottom, that it is supposed to predict the shift in the trend, and that it does fairly good. When this goes down significantly, we can see that there is a significant trend change. When the same goes for here, it's also a significant trend change. Also, when we hit the bottom, it is also changing direction. So in those essence, it's probably better just to look at when things are starting to change directions, especially when you hit the very top or the very bottom. Here in the middle, not very much. Probably if you look at the cloud, this was also maybe inside of the cloud's action and so on. So yes, we can go and look at the indices before the US session basically opens. So this is the S&P 500, and of course this is not a futures contract, so it hasn't really opened yet. But if you look at the Nasdaq and those companies yesterday, then they have completely all changed directions. If you look at them in pre-market at this current stage, they are most of them up 1 or 2%. So expectations for Nasdaq is that it could rally significantly today. That is basically to be seen when the Nasdaq basically opens. But yesterday was a really good day. This was up roughly 1%, 0.82%, and the 20 exponential is holding really well. Technical indicators, they are turning around. They are bearish, but they are turning around. So for example, the MACD is leveling off and looks like it's going to head back to the upside. We're on the edge of the top of the Bollinger Band. So at 4,219, that should be a struggle for this to get through. But we have passed it in 4,200, which was basically the target here. So RSI is flat, stochastic, CCI is flat, stochastic is turning around here and becoming bullish at this current stage. So if you look at, for example, the cloud for the S&P 500, you can see that we are way above the cloud. We have the crossing here, which is a buy indicator, and there's quite a big distance between the 9 moving average and the 26 moving average. So there's no sign that this is going to break down significantly. We have just had a minor pullback before we rallied. If you look at the 4 different charts, we can see that you can get rid of most of this. So in the half an hour chart, it is rallying from the 100 moving average significantly. In the 1 hour chart, it is rallying from the what is this? This is the 20 exponential moving average. It basically hit that and then rallied above the 50. Then we have the 2 hour chart, and there is the 100 moving average that is significant support, and that we are basically bouncing off. So here in the 4 hour chart, it is the 50 moving average and the 140 exponential moving average, which have acted as major support. So we are approaching previous highs, and if those break, then most likely the target here will be 4,400. So if you look at the Nasdaq, So the Nasdaq found support at the 50 moving average. It rallied above the the 40 exponential and is now also testing the 20 exponential moving average. Technical indicators are mixed. MACD is bearish. The RSI is fairly low and flat. The CCI is bearish and the stochastic is turning around but still in bearish territory. We were significantly overstretched here in the Bollinger Band, and it's just a matter of time before we rally towards the middle, which is right here. And this is also where we started breaking down. But at that point, we are above the 20 exponential, and we could head towards the very top of this range, which is all the way up here, and that's a rally of give or take 4% to the upside. Probably won't happen in all at once, but considering what the job numbers said today, expectations for continuation of the monetary policies that will most likely continue, and therefore stocks could be expected to rally in the future. So if you look, for example, at the cloud, we can see that we had back here, this was in late March, we had a crossing of the 9 moving average and the 26 moving average, and this was basically the buying signal for the Nasdaq. We have rallied all the way up towards this level here, which is 14,087, and then we broke down. So the distance still between the 9 moving average and the 26 moving average is quite substantial still, so there's no clear sign that this is going to be a selling signal. We did fall, but there's still no selling signal here. We are fairly overstretched. You can see the Bollinger Band here, went way outside. So a pullback is expected. And as you can see before markets opening, we are well above 13,800. Look at 4 different minutes chart. We can see that we hit, don't have it here. We did a double bottom and then we rallied. So if the double bottom basically breaks here, then this will go significantly lower. We can look, for example, at the Fibonacci retracements for this, and we can see that we got really close to the 50 Fibonacci retracements. If that basically breaks, then we have the 60 and then all the way down here to these previous lows. Even though we take it down here, it's kind of the same. We just 38.2 will become basically the bottom, and will drop to the 50 down here at 13,153. Sorry. So if you look at the 1 hour chart, it is still, we broken the 20 exponential. We are most likely going to test the 50 here. We are also above that before market starts, so we're gonna have a gap up when basically the market starts. We found in the 2 hour chart the support here at the 200 moving average, and it looks like this was basically it. If we break the 200 moving average here, then of course then we'll drop significantly lower. Same goes for here in the 4 hour chart. It is the 100 moving average that acted as a major support. Yes. So, any questions? So market just opened, and therefore I'm going to start looking at the price action there. So yes, we'll start back on Monday, and good weekend and good luck.